Recently, we see this increase in wrench attacks. I was sent one actually just this morning that was $59,000. Somebody was murdered in South Korea. So people are absolutely just being targeted just for owning it. So I think people really always need to think very hard about privacy, right? If you're not already kind of public about your holdings, it's probably a good idea just to stay that way.
Hey everyone, welcome back to the show. Here with me this week is Becca Rubenfeld. She is the co-founder and COO of AnchorWatch. Becca, I feel like we've taken months to just schedule this.
Yes.
Thank you so much for joining me
Thanks
here
for
in New
having
York.
me. I'm really happy to be here.
So first of all, tell people, what is AnchorWatch? You guys are doing some fascinating things, and I want to learn a little bit more about the insurance landscape and the idea of insuring your Bitcoin. So what is AnchorWatch?
So AnchorWatch is a company that provides insured custody. So we have our proprietary custody solution. We call it Trident Vault, where Bitcoin owners can actually store their Bitcoin. And even that's pretty unique. We use some unique tech to keep Bitcoin safe. But then we cover that custody solution with Lloyds of London back insurance. So it's really the first way that Bitcoin owners can get 100% insurance, full coverage on their Bitcoin. And the insurance covers loss of access to your Bitcoin for a variety of reasons. But it's really the combination of these two things. It's the custody, the tech that's Bitcoin native, as well as the bespoke insurance that's paired with it.
You dropped the mention of Lloyds of London like it was nothing, but it's actually a really big deal. Can you give people a perspective of how big of a deal it is that Lloyds of London is a part of this?
Yeah, it's really exciting. So Lloyds of London is the oldest insurance market in the world. You know, they go back hundreds of years, so extremely respected, across many different industries. And Bitcoin and insuring crypto is a tall order for a really traditional insurer. So Lloyd's was the insurer that has a tendency to be open to these kind of new products. And so they came in and they actually gave us 100% backing for the program. So what that means ultimately is that the insurance is a Lloyds of London policy. And so you don't have to trust, say, AnchorWatch, maybe a company that you're not familiar with yet, because the insurance itself is backed by this company. And we have something called cover holder status. So that's something that we worked a couple of years to attain, which just means that we are actually authorized by Lloyds, that when we write insurance policies, they are on Lloyds of London insurance contract paper. So it really was a huge deal. It means that the industry is maturing, that we were able to convince them that the tech is sound, that actually this is a asset class that's insurable, that we can actually assure them, Lloyds, that we can actually kind of predict the rate of loss here. And therefore, it's something that they should be willing to put their collateral behind.
Yeah, it's very legitimizing.
Yes.
Okay, so most people are familiar with like an FDIC insurance. So if something happens to their bank account, there's sort of a lender of last resort and a backing, you're safe up to $250,000. Don't worry. I've heard from a lot of newcomers that they're nervous about something like Bitcoin because there is no mom and pop that's going to come in and save the day if something happens to your money. So can you talk about essentially the solution for that and how that would work?
Well, the solution is just private market insurance, which is what we're offering. So FDIC is, a government program, right? So it's a government backstop. And Lloyd's insurance or private market insurance is actually from a first principles standpoint. I think as Bitcoiners, we like it better. We're saying, we can actually come in, provide a service, collect a fee for that service. And so for customers, what that means is they get the benefits of an FDIC, right? Meaning they have the protection of insurance. It's just done through the private market instead of relying on the government to provide that backstop.
So if you are a Bitcoin holder, would you essentially be a customer of AnchorWatch?
Yes.
Or would the place that you custody your Bitcoin be a customer of AnchorWatch, or both?
It could be both. So let's just start with an individual Bitcoin owner. And that could be a person or that could be a company that maybe holds Bitcoin on the balance sheet. So they have many custody options ranging from pure self-custody where they hold all the keys to the other end of the spectrum, which is a sole custodian where they hold all the keys. And then there's collaborative collaborative custody and kind of other options in the middle, right? But it's all just key management. And so if you become an AnchorWatch customer, you're really opting into our custody solution. So we've built this platform that I mentioned is called Trident. We use tech called miniscript, which is Bitcoin native, that allows us to do more advanced smart contracts on Bitcoin. And I can explain kind of what I mean by that. But really, people are opting in to use our custody solution because it's extremely, extremely safe. And then there's a few places just in Bitcoin tech in general where you're like, oh, but there's still some risk factors. There's still some ways, even with the security of Bitcoin, that losses can still happen. And we made sure that when we wrote the insurance contract with Lloyds, that we made sure to plug those holes with the insurance. So we're utilizing the security of Bitcoin and all the Bitcoin native tech features. And then we're just plugging the few remaining holes with this really high quality insurance that ends up being the most holistically protective custody solution we think in the world.
Coin Stories is brought to you by Genius Group, a Bitcoin treasury company listed on the NYSE under ticker GNS. Genius is on its way to hodling 1,000 Bitcoin in its treasury while educating the world on a Bitcoin first future. Genius is launching the Bitcoin Academy with courses from Safety Namoose, author of the Bitcoin Standard. Join the launch waitlist via the QR code on the screen or the link in my show notes and receive the weekly Bitcoin Treasury newsletter. Plus, get a chance to win a whale pass to Bitcoin 2025 in Vegas. Genius isn't measured in IQ. It's measured in BTC. Next up, a quick word about my friends at Bitwise. They've been educating investors on Bitcoin for more than 7 years, have over $10 billion in client assets, and a team of 100 plus. Their weekly newsletter is a must read. It's written by their CIO, Matt Hogan, one of the best minds in the business. I highly recommend it. It's witty, bold, and quick. Takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. And always, of course, carefully consider the extreme risks associated with crypto. Don't forget to join me in BTC Vegas this May and attend the 4th annual Women of Bitcoin Brunch. Use code HODL for 10% off your pass. Okay, so I want to better understand miniscript.
Okay.
I find this to be fascinating. I'm not technical. A lot of my viewers and listeners aren't either. I'll never forget. I think it was 2022, my second Bitcoin conference. There was a barbecue at Michael Saylor's house. I think it was Jack Mahler's birthday, maybe, if I'm recalling. And Rob was sitting and explaining miniscripts.
Yes.
And I was like fascinated, but everything went over my head.
Yeah.
I couldn't really understand it. It seemed very, very technical, but also fascinating and like a total breakthrough. So how would you simplify miniscripts?
Okay. So first, let's just talk Bitcoin custody. So we use the analogy of a post office. So walk into a post office box, there's a wall of PO boxes, and you can put your key in and open the door, right? And so anybody can see what's on the Bitcoin blockchain, but only the person with the private key can put the key in the door and actually control what's inside. So that's kind of how we view kind of what custody is and what a private key is. So one key, single sig, right? A lot of people are familiar with multi-sig, where you have, for example, a 2 of 3 or a 3 of 5. So miniscript goes one step farther, and it allows you to do slightly more advanced kind of key configuration and spending conditions, but natively on Bitcoin. So, for example, instead of just being 2 of 3, so that's multi-sig, with miniscript, you can do things like 2 of 3s. So we together could hold Bitcoin. You could have your own multisig where you or your company has a 2 of 3. And AnchorWatch also has our own independent 2 of 3. It's not a 4 of 6, though. So that's one thing that's different on miniscript, is each of these conditions is separate. And what that means is, for example, in a company, we could have the CEO, the CLO, and the CFO hold keys on your side, and your team has to satisfy that spending condition, and separately, AnchorWatch has to sign. And so what that means is that, you can enforce corporate governance and compliance, but at the protocol level, meaning that these individuals have to sign, and you can distribute keys in very creative ways if necessary to actually kind of enforce rules, but at the protocol level. You could do things, for example, with miniscript, you could say CEO, CFO, CLO are the key holders in a 2 of 3, but maybe the CEO must sign, right? So that's different from just a basic 2 of 3, where it's any 2 of 3. But instead, we could say, okay, it's 2 of 3, but one of those 2 has to be Natalie. And so then the other main thing with miniscript is you're like, okay, that makes sense. But what happens if Natalie disappears? If Natalie is a required signer, now we have a risk, right? The risk of Natalie disappearing. And so then the other main feature that we're utilizing are called time locks. And so time locks in miniscript allow you to add this element of time that allows you to put in recovery options. So in this example, we could say, okay, the CEO, Natalie, must sign, but in case something happens to Natalie, maybe after a year, then it's just a normal 2 of 3,
Okay.
right? So we could say, okay, for the first year, it's 2 of 3, but Natalie must be one of them. But after a year, it's just 2 of 3, and the other 2 people could sign. And so that's what miniscript does. And so we've constructed a vault that's pretty advanced that really, really protects you from kind of any what if scenario you can come up with. And then again, we just plug the holes with insurance.
Well, I've always heard that complexity actually decreases security. So
It can. But here's the thing about everything I just described. It actually, the tech is extremely simple because imagine that, the word smart contract, if, it's a bit of a catchphrase, but really think of it as just an if-then statement from school, like if this, then that.
Then,
so it's like if 2 of 3, then spend the Bitcoin. That's multi-sig. And so this is saying if 2 of 3 and if 2 of 3, spend the Bitcoin, or if 2 of 3 and if 2 of 3 and a year has passed,
then execute
then
the
spend
demand.
the Bitcoin.
Yeah.
And so it actually is still very, very simple. That's why we say they're slightly smarter smart contracts. These are not super convoluted things. They're just stringing together if then statements. And the other great thing about miniscript is that because it is in these discrete kind of bite-sized if-then statements, it's human verifiable. So that's a huge difference from, some crypto smart contract. Like you could set up a vault with AnchorWatch. So a miniscript enabled vault, and we would tell you how it works. We'd say, okay, it's a 2 of 3 and we have a 2 of 3. And then after some time passes, it changes. And you're like, okay, I hope you're telling me the truth, AnchorWatch. But what you could do is you could take that vault and everything that I just described would be in the vault's what's called an output descriptor.
Okay. So you can take
and
it
you
out.
could take that and have it audited by an independent third party who could actually read that, verify that, yes, what AnchorWatch is saying, it is 2 of 3 and 2 of 3 in it. And yes, what they're saying, we can verify that. And then you put your Bitcoin in the vault.
Interesting.
So the way we do it is that your Bitcoin is in your AnchorWatch vault. And so again, if you wanted, you could have the vault configuration, how the vault works. You could have that independently audited before you ever put your Bitcoin in it.
Fascinating.
Yeah.
Okay, you did actually a better job than Rob explaining it. So,
I've had a few reps in the 2 years, I think, since he was explaining it.
Okay, so this all sounds though like the custody side, but where does the insurance side come in? I'm assuming someone would be paying premiums.
So the custody itself is protecting you from many, many scenarios. So we could go through that vault configuration and you could be like, well, what if I lose a key? What if I lose a key and there's a tornado? What if there's a wrench attack attempt? What if this? What if that? And almost everything from a majority of those what if situations, I can show you how the tech is protecting you using these time locks, using the key distribution. There's a few things though that very clearly the tech cannot protect you against. One of those things is a really sophisticated wrench attack. Right? A wrench attack can compromise the best security plans. So that's something that we made sure that's a covered loss. So if a loss happened, despite the strength of our tech, if a wrench attack happened, that would be a covered loss. So even though the Bitcoin had been stolen, you would be protected by the insurance. And another place that we made sure the insurance contract covers you is actually if AnchorWatch is a bad actor. So that's always a big concern when you're considering who to use as a custody provider, custody services providers. Like, how do we trust you?
Right.
And the truth is you actually don't have to for two reasons. The first is because everything that we say about the tech is verifiable on chain, because this is L1 Bitcoin. And then two, because that circumstance where AnchorWatch is fraudulent or commits collusion, then that is specifically covered by the insurance.
Wow.
Yeah. So, and then to answer your other question, yes, you buy a certain amount of insurance limit. So if you buy $1 million of insurance, that's how much insurance you have. And I like to use the example of fine art. So let's say you're an art collector and you buy a painting and you have it appraised at $1 million. So you have a painting, it's been appraised at $1 million. So you buy $1 million insurance policy. You don't cut off the corner of the painting to pay for it. And if the painting is destroyed or stolen, you're not paid out in paintings, you're paid out in dollars. And so this policy actually works the exact same way. You always get the amount of insurance you pay for. And so let's say in that analogy, the halfway through the year, that particular artist is really popular. The art market is so hot this year, and the $1 million painting becomes a $3 million painting mid-year. You have a choice. You can call your insurance agent and you can say, hey, my painting has gone up in value quite a bit. I'm not comfortable. I'd like to increase my insurance limit to $3 million. The insurance agent will just send you a prorated invoice for the balance of the year. And now you have paid for $3 million of insurance.
Got it.
Or with AnchorWatch, we will actually allow you to ride it out. So if you're like, you know, the painting is worth, or the Bitcoin is worth 3 million now, but I'm comfortable with $1 million of insurance. That's enough to reduce the risk of ruin for me and my family. So I'm just going to stick with $1 million of insurance, even though the value of my Bitcoin is 3 million. But the main thing to remember is that you really are just always getting the amount of insurance you pay for.
Got it. So it's not denominated in Bitcoin. So if you lose a Bitcoin and you bought it at 100,000, now it's worth, 10 million. Let's be really bullish for a second.
Sure.
If you took out the policy at 100,000, you'd get the $100,000 back, not the 10 million, not the Bitcoin, essentially.
Now, that's correct, but that's actually an interesting reason for that. So I think there's many advantages to Bitcoin denominated policies. So instead of $1 million policy, you have a 10 Bitcoin policy, right? You would pay your premiums in Bitcoin and you'd get paid out in Bitcoin. And then that price volatility that is abstracted away. It actually doesn't matter anymore. And so there's advantages to that. And so when bulls like ourselves, think about my 100,000 Bitcoin being $10 million, that's appealing, right? Because you're like, oh, that's good. So if I have a loss, I'll get $10 million. Now, the reason we don't do that right off the bat is actually a regulatory reason. Insurance companies cannot hold Bitcoin on their balance sheet without it impairing their balance sheet. And so presently, the way regulations sit today, it's really unlikely that, say, Lloyds or another insurer is going to directly hold Bitcoin on the balance sheet, which would enable that insurance. So for the time being, especially in the United States, it's dollar denominated. But I do like to point out as well, again, in either currency, whether it was denominated in dollars like we have it today, or we denominate in Bitcoin like I expect us to do in the future, you're still always just getting the amount of insurance you pay for. The way we have it today, you buy $1 million of insurance denominated in dollars, you have $1 million of insurance.
Yeah.
If it was denominated in Bitcoin, let's say you had 10 Bitcoin worth of insurance, and the rate for that was however many sats. When you signed up for the policy, you had locked up, let's say it was $10,000 worth of fiat to pay your insurance premium. But halfway through the year, Bitcoin is 10x or 30x in value. You haven't paid more in sats, but you still, have handed over that value in fiat. Right. So you're still always kind of doing this lifestyle trade-off, regardless of currency. So I think people do get kind of pulled into the price volatility aspect. And it's an interesting conversation that I enjoy kind of diving into, because there's advantages on both sides. But on either side, you get the amount of insurance you pay for.
Got it. Okay. That's really interesting. This episode is brought to you by Casa, the leader in Bitcoin self-custody solutions, helping people like me secure their wealth with simple, powerful multi-key vaults. And now Casa is here to help businesses and even governments do the same. Introducing Casa Business, a secure, easy-to-use 3-key vault designed for small and large businesses with team signing capabilities and a web dashboard. Start your Bitcoin treasury the secure way and protect your assets. Get 10% off your Casa plan at casa.io/Natalie. If you use Bitcoin, you need a wallet that's fast, simple, and packed with features. That's why I love Speed Wallet. Send and receive Bitcoin or swap Bitcoin and stablecoins instantly. Shop gift cards, play games to earn Bitcoin, and explore mini apps. Download Speed via the QR code on the screen or the link in my show notes and use referral code CoinStories10 for 5,000 free sats. Next up, the Bitcoin way. Bitcoin is only freedom money if you control it fully. The Bitcoin Way can help you learn the skills to properly secure your Bitcoin in 100% self-custody with zero counterparty risk. Go to thebitcoinway.com/Natalie to speak one-on-one with the best experts. Your security and sovereignty are priceless, so don't gamble with your future and peace of mind. What would you say is the most difficult thing for people to grasp when it comes to just protecting their Bitcoin? And why do you think something like insurance, I don't know, might make them feel a little bit more comfortable?
Well, so I mean, I think in terms of grasping, I would say the conversation we just had is actually probably the one that people have to think hardest about, where they're trying to measure the value of insurance and like, well, what if it 10x's? And right. So I would say in terms of grasping, it's probably that conversation, but we just talked about that. In terms of though, then deciding, if it's right for you, if it's something that you want to prioritize. One, I would just point out that there is not a mature asset class, in particular, a bearer asset class, where if you lose it, it's gone forever, that doesn't have a robust insurance market. That is just part of a mature asset class, which is the direction that Bitcoin is rapidly moving. And then just be realistic that insurance is there to reduce the risk of ruin, right? And Bitcoin has developed and Bitcoin security has developed because in a way that because there was no insurance. So we developed better and better self-custody, self-accountability, because there was no backstop. But, recently we see this increase in wrench attacks.
Yes.
Right? It's an increasing problem. People are being targeted just for owning crypto, right? And an interesting thing that we're seeing is the value of those thefts, those wrench attacks, are actually not particularly high. I was sent one actually just this morning that was $59,000. Somebody was murdered in South Korea for $59,000 worth of crypto. I'm not sure which crypto, but so people are absolutely just being targeted just for owning it. So I think people really always need to think very hard about privacy, right? If you're not already kind of public about your holdings, it's probably a good idea just to stay that way. Like,
so true.
Just what's the value of really flashing that around?
Right.
If it's going to turn you into a target. But when we think about all these different custody options in the market, so self-custody all the way to sole custody, when you think about a wrench attack, if you start thinking through the what ifs, which we think a lot about, it's actually only insurance solves that problem, because you could say, oh, well, I do self-custody, but I have a decoy wallet, I have a passphrase, I do this, I have all these kind of tricks, right? But somebody puts a gun to your child's head, and like, I think most people, they're maybe not going to end up kind of sticking to their own security, right? And so people then will go all the way to the other end of the spectrum and be like, look, I would love to do self-custody, but the risks of that are too scary. So I'm just going to give my keys to a custodian, right? And so I'm just going to have them hold that Bitcoin for me, and I'll take the risks of the sole custodian because that feels safer to me than the gun to my child's head. But then you think through, and actually just having people know you have Bitcoin actually is the risk. Because even if you have it at a custodian, the gun comes to your head and they say, tell your custodian to send the Bitcoin. Right. So you not holding keys actually does not remove the risk. And so you can think through the best security. At the end of the day, these thefts will continue to happen. And really the backup plan is insurance. If it happens, you want the peace of mind of knowing that you won't be absolutely ruined by this happening.
Well, speaking of recent attacks, everyone's familiar with what happened with Bybit, and we have seen custodians where they get compromised. So, I mean, I would imagine that every exchange would have to have insurance. Is that
I would say I would say most or all of them do have insurance, but it's really, really important to double click into that and how much insurance compared to how much they have in custody.
Right.
Who is the insured? Are they the customer? Are they the insurance customer? Are you, as the Bitcoin owner, are you the customer? So if a loss occurs, is the insurance going to pay you or is it going to pay them? And they use that money to, for example, pay their own legal fees in the case of a loss.
Where would you find this information?
If you're considering becoming a customer of a company, I would imagine, or you could ask, you could say like, what insurance policies do you have? And do I have any benefit from them in the case of a loss? What does it actually cover? Does it cover only inside bad actors or does it cover outside thefts as well? Does it cover hacking? Does it not cover hacking? So really kind of diving into an insurance contract is very important. And prospective customers of ours are welcome to read our insurance contract and ask questions about our coverage. So the thing, from what I understand and our research into the insurance held by a variety of custodians and exchanges out there, is they tend to have what at first glance seem like pretty meaty insurance policies. So maybe they have a policy that protects against inside bad actors, so an employee, orchestrating a theft, maybe for $100 million or $200 or even $300 million, which is, a nice size insurance policy, until you look and you're like, oh, but they have 76 billion of customer funds in their control, or they have 500 billion.
Crazy.
And so if you actually start looking at it, you're like, oh, this isn't pennies on the dollar insurance. This is fractions of a penny on a dollar insurance.
And that's the reality with most exchanges right now?
That's the best case. And so really you're like, okay, even if the company's policy is that they'll pass along an insurance payout to me as the owner of the Bitcoin,
you're going to get this much.
It's de minimis, right? So it's So I would say my perception is I think these are good quality insurance policies, but do they protect you, the Bitcoin owner? I would look twice. So AnchorWatch approached it from the exact opposite side. We said, the service we're trying to bring to this industry and help mature the industry is to make sure the owner of the Bitcoin actually has the peace of mind, not the custodian.
Right.
I want to insure you, right? I want to keep you safe. And so when you're our customer, you have your Bitcoin in our tech. You hold your own keys. With the time locks, it actually becomes self-custody. If you stop being our customer, if we went bankrupt, because of those time locks, it actually is totally controllable by you. And then again, there's a few places that, the sophisticated wrench attacks, us being a bad actor, some crazy sort of combination of tornadoes and hurricanes and wildfires all happening, in a way that would make multiple keys all disappear. Those are all covered, and it's your insurance contract. Natalie Brunell's name is on this insurance contract.
That's really fascinating because, you just never know. I mean, I was thinking about the wildfire victims. Their homes got destroyed. And then also I saw the local bank where maybe people had a safe deposit box that had another key or something up in flames. I mean, you just never know.
That's right.
And what comes to mind too is these massive companies now that are putting Bitcoin on the balance sheet, the strategies that are holding hundreds of thousands of coins with a custodian.
Yeah.
And the custodians, in my interview with Jameson Lopp, he said that most of them are held in one wallet. I mean, it could be multi-sig, but it's mostly held in one place, all of the Bitcoin.
I would say it's a combination. I don't think, let's say the companies that have hundreds of billions, I don't think hundreds of billions are in literally one wallet. but it might be in 8 wallets. And it's still like massive, massive kind of honeypots, right? So, I mean, I definitely think if you're, in particular, a large company, a publicly traded company, to definitely look twice at this. And what we're hearing is definitely that they are. So companies are looking, the term this year seems to be diversification. So lots of diversification of custody going around. And we're happy to kind of be a new provider on the scene to do that. So let's say you're a company that actually needs to use custodian for, reasons related to your company. Just self-custody is not right for that organization. Maybe just choosing one custodian is probably too much of a centralized risk. So at least you can split it up into 3 or 4 or 5 custodians if we're talking large sums. AnchorWatch would love to hold and insure a portion of that. But yeah, I mean, there are trade-offs for every custody model, right? So I would say the trade-offs of self-custody, in my opinion, are superior to the trade-offs of a sole custodian.
Got it.
Right. So I would opt for self-custody, but there are definitely still risks, right? People are afraid of it all the time, including like, what if I die? Like, will my spouse actually be able to understand my instructions and actually find the Bitcoin?
For sure.
So what we did and why we built on miniscript, this tech, is that we actually really are kind of bringing in best of both worlds. So you still hold your own keys. We don't have a backup. We never have a backup. They are your private keys. It becomes self-custody if we disappear. But then we have all these kind of options using the time locks to cover different contingencies. So you get into the what if situations and we're like, yes, if that happened, we would just wait X number of months. And then using one of these time locks, we could recover your Bitcoin. And if you get to one of these scenarios that the tech couldn't protect you, then the insurance comes in. So what we've tried to do really as a Bitcoin native company that really, loves Bitcoin and enjoys building on it and trying to add to the industry is really preserve all the benefits of self-custody, but bring in some of these kind of TradFi or these traditional safety elements that exist outside of Bitcoin to just add this extra level of protection that mitigates some of those fears of self-custody.
Yeah, and insurance gives people just more peace of mind, especially people that they see Bitcoin and look, it is scary. When I started, I was like, it's digital. It can ultimately be hacked. There's a back door. Someone can do something, right? So I get it.
No. I mean, it adds true value, right? So nobody can afford to lose everything. Right. That's why we buy insurance on anything. Right. That's why we buy homeowners insurance or car insurance, just because I literally can't afford, to rebuild a home with cash. Like,
and you just never know.
Yep. And so you decide, the risk of that is too devastating. And so I choose to give up some of my money to pay for insurance to remove that risk of ruin. And for hundreds of years, insurance predates fiat, literally. So for hundreds of years, business people, individuals have been kind of making that calculation and saying, look, I'm willing to pay a little bit to reduce that risk. And so we're just taking that age-old idea and just bringing it to Bitcoin.
Got it. Okay. I want to hear a little bit more about just what made you get into Bitcoin. And you have a fascinating career background. I know you've shared it on other shows, but maybe if you can summarize it, because I do think it's interesting for my viewers and listeners. You've worked in fashion, right? At American Eagle. Okay. You climbed the corporate ranks. You were at Starbucks. You were in charge of like $20 billion there, right?
Moving it around. Yeah.
Pivoted to Bitcoin. Tell people a little about your background.
Well, I mean, you covered it well. So I spent 10 years in the fashion industry. So I was a merchant and planner. So did both actually the fashion side of it, selecting and designing clothing items, but also doing the finances and profitability and the numbers for that. And then I went over to Starbucks and I did a variety of things ranging from a very, very high dollar program that was kind of all the outbound spend for the company, but also really interesting kind of fun things. Like I did beverage development. I did I was the program manager of global quality food quality and safety.
Really?
Yeah. I had a really interesting kind of path through Starbucks that I got to do a number of just kind of diverse and really interesting things.
Wow.
So yeah, I did have a bit of a meandering, especially in my Starbucks years. I was there for 10 years. So I really, really got a sense, just because of the particular roles that I held, of how a big company works, how it's run, how all the machine kind of fits together, which was fun. And none of that has anything to do with Bitcoin at all. So in terms of then how I transitioned from all that over to Bitcoin was, well, I mean, I had been trading it initially. So I was just swing trading.
Oh yeah, that's right. You were also a day trader. I
Well,
forgot.
I traded my own portfolio since I was a teenager, but yeah, I was swing trading. A friend had given me a stock tip to pick up some Bitcoin. So I had been trading it for a couple of years, and then I got orange pilled in 2020 and 2021
Wow.
on Clubhouse,
Okay.
social media app, and met a lot of the industry people accidentally, and kind of got sucked. I went down the rabbit hole, as they say. And there is a story that I always think of that I feel like primed me for Bitcoin. And it's actually 1990, I think. I looked it up. I was 8 or 9 years old, and the national debt had just hit $3 trillion. I think today it's 36, 38. But it had hit $3 trillion. And I have this memory at that age, sitting at the dinner table. We had a black and white TV on the counter, which is hilarious. But so we had the TV and we watched the nightly business report, and every night at dinner, that's just what was on. I grew up watching business news, and my dad was a business professor. And so there was a story about the national debt hitting $3 trillion. And they had a graph on the screen, and it was showing it going exponential, and you could kind of see that shape, right? And I didn't know the term exponential or something, but I did because of the way I was raised. Like I understood debt. I understood paying back if you had borrowed money, that you had to pay it back. And so I'm looking at the shape of this graph, and I looked to my dad and I was like, how are we ever going to pay that back? And he was like, oh, I don't know. And I was like, no, really. How are we going to pay that back? Because we have to pay it back. And my dad, who generally had an answer for, an 8-year-old's questions, he didn't have an answer. And he was just like, I don't know. I was like, but even when I grow up, even when I'm an adult, I wouldn't have known the word accelerating, but I could see it was accelerating. Right. I could just see that we cannot pay this back.
No.
And he didn't have an answer. And I just remember from that age, I was like, well, that's not good.
Right.
So America rules the world, but we have all this bad debt effectively, and it can't be paid back. So someday, like, the world's going to collapse, right?
Oh my gosh.
Like, it's
how old were you?
8.
That's wild.
I was a precocious 8-year-old, but yes, I went back and actually, because I remember it was 3 trillion, so I went back to verify my age on when we hit that point. And
so you were primed for Bitcoin.
I was, yeah, and I understood that this global economy can't work forever, because someday they'll stop giving us money, right? We'll stop being able to continue to. And I didn't understand money printing, but through all that, my whole life, so I majored in finance and marketing, but finance, and partially because I just wanted to figure out how this is all going to play out. This can't work. And so then when I showed up on Clubhouse and they were explaining Bitcoin, and then they get into the Fed and money printing and kind of explaining all that. And just really quickly, I was just like, oh, yeah, so the world is broken. And actually, this can't work forever. So everything I suspected as an 8-year-old has now been, confirmed and clarified. And Bitcoin is a potential solution to that.
Yeah.
Bitcoin is a better way to do money, to do global economies than fiat.
And if you would have told the economists and pundits that we're going to be at 36 trillion, not that long after what you saw, I mean, they probably would have been like, no, we can't. Something's
Well, I
gotta
wonder,
give.
I mean, I suppose if we just literally pulled up the chart right now, the national debt chart, I mean,
It's
the
not
shape
going-
is the same,
Yeah.
right? So it's like you zoom out, you zoom in, like either way.
I know.
So, probably we could have drawn it out at that point and just continued the graph.
But it's so crazy to think that now I guess they're predicting 50 trillion, but we're sitting here saying it can't get to 50 trillion. The whole system will collapse, right? But it probably will get to 50 trillion.
Oh, I think it will get to 50 trillion, like absolutely. And
it's ridiculous.
I mean, I think I feel the same thing I did as an 8-year-old. I think someday it will all come crashing down because nobody likes somebody who doesn't pay back their debts. And eventually the global order will stop participating because it's no longer a good trade.
Mhm.
We've got the US military. There's lots of things that are preserving the balance despite the bad math. So there are reasons that this is continuing. And, I hope for America to remain on top our whole lives, right? But, it's very, very concerning. I'm certain we'll hit 50 right on schedule and continue on from there. And who knows how long it goes. But that's why we got into Bitcoin and because it really is, it's the alternative to all that. And hopefully it'll continue to grow and grow in strength and be there to kind of catch us when that happens.
Yeah, thank goodness we have Bitcoin. That is so well put. It's also a great place to end it. Any final thoughts or anything you want to leave people with?
No, thank you so much for having me. They can always reach out. We're at AnchorWatch.com. We're on Twitter with the AnchorWatch handle.
And you're taking customers, like
we're taking
individuals,
customers.
businesses?
Yep. We can serve US customers. Our policy sizes start from 250,000, so 2.5 Bitcoin, and we can go all the way up to 100 million per customer. So
it's crazy that soon 250,000 will probably be just one Bitcoin.
One Bitcoin soon, yep. But serving retail and commercial customers. We have an amazing inheritance protocol. So insured custody is perfect for your estate planning. We can do trusts, revocable or irrevocable business treasuries, miners, mining pools.
Wow.
We're putting together kind of additional insured custody products and insured financial products that are all coming. But today we can do that insured custody in the United States up to 100 million.
Wow. Well, congratulations on everything. I've seen you guys grow and everything has happened so quickly, it seems, but I know there was so much work behind the scenes. So hope to have you back. We're going to talk more. Becca has some really interesting personal stories, not really relevant to this conversation, but we'll get there.
Yeah.
Thanks so much.
I'd love to. Thanks for having me.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. If you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. Sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.